Yeah, we had a few when he was shooting 10 as well, but that's Jesper. All of you know Jesper. He heads STR in the region, and they'll keep showing this if I don't go off stage. So, thank you, Jesper.
Thank you. Have I ever looked older? Like, man, it looks good, but it's like, I can barely hold the stick. Jesus Christ. There's so many sofas, I don't know where to sit. Good morning, thank you, Mana. So, congratulations to Sofitel and Westin for a great event so far. And we did follow Eric David and his panels yesterday, guidance on the Negronis, the pre-mixed Negronis. They went down quite well. So they were in demand. They were in demand. Segue warning, what else is in demand? Your hotel rooms. Because if you didn't know, and you should know, demand has been stronger around the world than we've ever seen. And that's been the time for a long time. But it was never really going to grow at the same pace for too long. And what's interesting is, of course, when you are a multi-location, multi-country operator or owner, you need to look into the details. So we'll do some of this today. What's interesting, of course, is how that growth slowed down, and then we see a little bit, it's more single digits, it's down there, we expected that. And we had a little bit of a softening for a couple of quarters, and then it comes back in Q2. So we definitely need to drill down, because you see travel happening, but it's not everywhere, it's not the same. And that's why I want to early on get through this a little bit on China and some background, because there's a lot of myths, and it depends on what story you believe and where you read. What about the outbound China? What's happening there? So I'll break that down a little bit for you, because no doubt the outbound is growing. And you can say, oh, but is it? It's not in my market. We know that in China, going in and out of the country, airfares are down significantly compared to many other markets. Capacity's back up, business class, premium economy, all that's working well, but it's not yet those big numbers that we had in 2019. $250 billion in spend. But the targets for this year, what we're approaching is not that far off. 130 million is the estimation that we'll have outbound to China compared to 155 million. That's pretty high, that's pretty good. So we'll look at where they're all going. We still, like many others, say that it'll be 25 when it's fully back. But that's volume gain. What's interesting more is, who are these fake people from a random stock photo that I put up there? They're not a flag-waving group, right? They are FITs, and we see a massive increase in what they're doing. So it's more about the expenditure. The Chinese travelers are spending more because of the difference in the traveler that are happening. And that also brings competition. Bali's not the only place. Indonesia's not the only place. Everyone's going to compete like this. European capitals are missing, and they want that back. US cities as well, right? But there are many factors playing into why. And that competition has been interesting to see. So in 24, we're seeing big shifts from last year of where the Chinese are going. Korea and Japan have the cheapest airfares from China to Seoul and Tokyo, and that helps, apart from exchange rates, of course. Thailand is doing a lot of things right. They're still up there in the top 5. Australia's come back. China and Australia are now friends again, apparently. So you can buy Australian wine in China, and you can enjoy that. But listen, with some nuances, Chinese are definitely coming back, and Malaysia's done a lot of good things. What about Indonesia? Definitely growing quickly from last year. They're knocking on the door of the top 10 in Indonesia for these Chinese travelers, and we'll look at that more in detail. And the wider background of why this is happening in China, well, the disposable income has almost doubled in the last 10 years for the Chinese. So the middle income wage, but the problem for them is that that balance sheet for Mr. Wang, let's call him that, is of course that he's got a little bit of a soft RMB. There's an inflation abroad that affects how they do it, and they like to invest in real estate. A lot of Chinese have bought apartments and stuff. They're not seeing the same income from that property that they used to, so they look at, what about, should I go on holiday? Yes, but I'll go domestically. Because in the last 5 years, you must have, if you haven't been to China, if you haven't, it's an amazing place for tourists now. In the last 3-4 years, it's rapidly increased its experiences, its logistics, its hotels and everything. People like to travel. West China, Northeast, and these new leisure markets are the ones that are growing really fast, both in rates and occupancy. And one limitation in a second as well. And what helps this industry is that people want to spend more time and spend more money from their household economy. We see that as well. And one interesting example, they're spending it away from shopping. This is an example in the last 12 months. Chinese spend in Japan dropped in shopping from 51 to 37%. That says something about that move from groups to FIT. That word we heard yesterday, experiences, right? They want to do that, more culture, and we see it in Bali as well. Numbers are shifting in how they're spending their time and their money. So that's China a little bit. What about the Japanese? Well, I'm not going to say that the money's not worth anything, but surely when it's down 30% year over year, the outbound from Japan, it is more expensive. The yen dropped from it gained strength from 160 to 140 in the last couple of weeks, but it's still very expensive for them to travel out. So we're not seeing many of them yet. And then there's the Indians. Absolutely strong growth. It's bigger outbound than 2019, but the big thing is the potential. We see them coming into Vietnam a lot more, Malaysia, and into Indonesia, but it's still much smaller than it could and it should be. Definitely want to watch and look at which source markets from India, where the flights are coming as that increases. Korea is a very popular source market for many because the average spend per traveler is usually quite big and it's growing. Korea in itself is a very successful market now. You could call it that it's mostly about Seoul and Jeju, which is true, but it is a market that's doing well, a lot of great new hotels as well, but the limited volume is also in play for Korea. It's finite volumes of Koreans because it's not that big, but Southeast Asia is, for me, the biggest one where more can be done. The intra-ASEAN travel, short-haul flights are back, they're reasonably priced again with AirAsia, etc. That's the biggest opportunity for me when we're waiting on some of the overseas long haul. And that's not in play for everyone. So let's look a little bit. Manav shared some of the higher numbers yesterday about arrivals. So Bali until July is about 4 million, and 6 million was 2019 on the full year. They're already pace. They're already ahead of that. So Bali's gotten a lot of arrivals, and it's no surprise that the Australians are back. You've seen that. The big thing is the Indonesians and Chinese, knocking on the 10%. So the Indians and the Chinese are definitely increasing really quickly here, and their spend is increasing, and it's 35% in hotels and 20 in F&B. Again, the shopping is going down, and they want to spend more money in your hotels, and they spend more money per head and per night. So then let's look at value. What is the value? We take the example of an Australian traveler. He's going to stay in a luxury and upper upscale, and you can see the variance, right? So how much does a room cost, right? So the flights to Hawaii is one thing, and to Fiji, Fiji's doing really well. So don't let that fool you here. But the important thing is for Bali and a market like Phuket, that they have value, affordable, that they are reasonably priced for an Australian traveler from a currency perspective, and so far so good, as you can see in the numbers. So it's important when you look at which travelers you have and a good mix and not putting all your eggs in one basket, it is still very affordable for people to come to Bali in that sense. Is it getting more expensive though? One of the more common questions, what's happening with the rates? Well, at a global scale, North America and Europe, the growth definitely slowed down. Very low single digits, we're not seeing that much rate growth anymore. But when it comes to Asia Pacific, we can't really look at those numbers and say, I know what's happening. So we need to drill down. 23 is not 24. 23 was very strong rate growth in many markets, and then it started to slow down, and there's too many nuances in there. So let's go through a few examples of some of these countries. In Japan, where blue is, of course, the rates here, right, in a boringly colored chart. But if you look at Japan, it's all about the big markets, right? So Tokyo, Osaka, a little bit in a couple of other markets, pushing rates still, and continues to push. It's getting expensive more and more, because they can do it. That's okay. In Indonesia, it's not just Bali. Bali's seeing, what, 14% rate growth? Jakarta's 11% across Java, Kalimantan, wherever you're looking in Sumatra, rates are going up. And some would say it's overdue and it's underpriced, but it is growing. Malaysia is definitely, finally, seeing some rate growth as well. And if it started in Langkawi, we've seen it in KL, we've seen it in other markets, in Penang, in Malacca. So Malaysia is getting higher rates and getting new hotels and brands as well. And it's all green for Vietnam, because if you run a hotel in Saigon or Hanoi, you probably, the market's okay. But when I look at these islands around Cam Ranh and Nha Trang and around that region, it's not Wednesday, you see 10, 20, 30% occupancy. Still struggling in that recovery. So that market definitely stands out. So the common question is, what's happening? Are we dropping rates? And we need to give a little bit of a shout out to Auckland for being a little bit of a basket case at the moment. We talked about that last night because they have a lot of supply, a lot of high-end supply. And the government there is not really pushing that much funds into tourism anymore. And what happens? Rates are dropping. It stands out across all markets. And the golden child of Sanya for a couple of years where everyone in China went, rate pressure now across and many other destinations that are more popular. Tier 1 cities like Beijing, still a little bit. And the Maldives rate growth, negative rate growth, am I worried about Maldives? Not really. They added, what, 50 new resorts, but it's competition, and that's going to blow over a time period, and then we're back. I think I'm not too worried long term because the business on the books there still looks pretty solid. Rate growth will continue in these markets other, and some others. So there's still room for some rate growth, but it really depends on where you are. So let's go back to Bali. So ADR, those numbers make sense. We got about 14% growth there, and the small number, 28%, is over 2019. The more interesting thing is this. This is where Bali is showing much bigger strength than other markets in Southeast Asia. 6% over last year and 9% over 19. So Bali is definitely at the peak level. Does it compare? Well, Phuket has actually done quite well as well. They managed to get a lot of business in, and you're seeing against 23 and 2019 below. So they're doing well. Market like Langkawi that is up and coming again, not the same, but getting there. But Bali stands out in Southeast Asia as a market that is doing really well. And it's not just against that concept. It's when you compare to further away, when you look at, it's really only Fiji and French Polynesia. It's really only Fiji and French Polynesia where you have the same occupancy growth historically compared. The other ones still a little bit behind. Rate-wise, same story. Higher rates, maybe Fiji, French Pol, and Hawaii, but the other markets are below. So Bali stands out, and I keep digging and finding where's the problem with Bali? What's the issue? Because I don't like everything to be too rosy, so I look at that. We are at peak. We're getting all these arrivals to show you the rates and the occupancy. It stands out against the competitive. So let's look at seasonality. You're here now. You're right now here during peak, and hopefully you know that if you operate in Bali. These months here are the highest occupancy and the highest rates of the year. Pretty strong seasonality here. But what matters is, what is the difference in between the worst month and the best month? It's about a 25 percentage points. About 25 percentage points. And what matters is it the same? And yes, it is in Bali. And that matters because you look at a market like Phuket, 50% difference. So the lowest month, when they have no occupancy or less, rates go down here. In Bali, it doesn't. Now that could be more wholesale, different market composition, all sorts of stuff, or it's else affecting it. I'm just saying, a market like Fiji and Phuket, when the occupancy goes, the rate goes down. In Bali, it really doesn't. And that's an interesting, makes it easier to budget from a revenue management standpoint. And we look across all the different sub-markets that keeps growing along the west on the beach after Canggu, etc. All these squiggly lines point to one trend. When you get closer to peak season now, there's much smaller difference between this year and last year. So it's saying something about the tightness of the market. We can't expect this growth to continue in Bali, and that makes perfect sense. So are there then opportunities? So that's even more positive news, which worries me because I need some risk here. Well, we talked yesterday about traffic. If anyone wants to drive right now to Canggu, it's not going to be a pleasant ride. That's fine. We know that, and hopefully there's actions around that. But when you come to the auto gates, you love it. Because that experience, if you have an electronic visa on arrival, it's like Singapore, or even better. You just go straight through and it's amazing. If you don't, you're going to end up with that, and it's going to take a long time. And let me tell you, when I arrived Monday night, yes, you're not supposed to take pictures there, so don't tell anyone and stop filming. That was the case, right? And I understand, and I agree absolutely with John Flood, what he was saying yesterday. What happens is, we can't have people overstaying and running bad business in Bali. There needs to be control. If you implement these auto gates, you want to be an amazing destination like Bali or Indonesia, Bintang, Batam, whatever it is. People don't know. I spoke to numerous Australians, mostly, in the queue who were saying, I didn't know. I'm stuck here. They probably stood there for 3 hours. I think this happens every night because they don't know. can only do it on a laptop. If you do it on a phone, it's about 30% chance that you can actually be successful. But it'll get there. I like the progress and where it's heading. And behind this, of course, the big beast behind it is, of course, sustainability. Water scarcity. How do we deal with waste management? This is not a good look. Every day, there are more TikTok and Instagram posts on what is happening. And the question is, how much is too much? This is not a good look for any destination. In Southeast Asia, it is a precarious environment. So hopefully there's more work on that. So I did manage to find some negative stuff. Nice! Let's move on from Bali. Jakarta has moved on quite well and found its occupancy. Our forecast is that we'll see some increase in Jakarta for sure. But it's low and slow, like I say everywhere else. More interesting is about the rate component. ADR is going to grow. It's not massive, but it's a little bit more than some of the others. So Jakarta is growing. So before we eventually see a new capital, Jakarta is looking quite strong fundamentally. But you have to remember that in Jakarta, I look at that, it's never been more expensive to run a hotel. It's never been more expensive to operate a hotel. Cost in insurances and whatever it is, and labor cost. And Mana was talking about F&B. Labor cost in F&B is one of the highest bullets. It's really increasing quickly, and that's a challenge. What helps is, of course, events and holidays. Aside from the Taylor Swift nonsense in Singapore, etc., events really work, and they have a big impact. And when they released all these amazing holidays that you enjoyed in Indonesia, and we were very jealous everywhere else, this is what happens, right? And you can say, yes, during the religious holidays, this was extended so much, and it's not just your normal, oh, it's a calendar shift. This was huge. It was massive over those days. And you can go west over there, and you go Malang, on Eastern Java, and all the other markets. These are some of the key markets that where it drove so much. And you can say, like, oh, if you do too much holidays, it impacts the productivity of the nation and GDP. It also means people travel more, and they spend a hell of a lot more money across Indonesia, particularly in domestic travel. So I talked about the future occupancy. This is a good story because we're seeing normality around what is on the books. Jakarta looks a little bit lower there because people book more last minute. Maldives, people book way ahead of time, and that's what I was saying earlier. What about the gap to last year? So if I go 1 year back in time and have a little bit more hair, what happens? Shanghai and Tokyo now have more occupancy. That makes sense what we talked about earlier. Jakarta is 3% ahead. Good story. So that's short booking window. And if you are within that 1% or 0 there, that's probably okay too, because the booking window is shorter these days. People book more last minute. And if you look at that green bar here, within the last 14 days, business travel, mostly on weekdays, comes in quick, right? So people book there a week in advance. They go, I need to do a business trip on Tuesday or Wednesday in Jakarta, and that happens quite quickly. So that's tightening that thing. So when we forecast, this is not interesting anymore, right? 23 over 22. Huge numbers, 50, 60%. What's more interesting is this. What do we see for the rest of the year and 25? Both in occupancy and ADR. Apart from anomalies like Hong Kong and Tokyo, where it will grow, and mind you, look at the scale. We're talking 6, 7, 8%. Everyone else there, 1%, 2%. That's not a lot. And that's the key point, I think, for me today. This tightness in revenue growth is a challenge if you don't manage your costs and continue to manage your costs really diligently. So while you look at the other factors that are there, right? Will there be a war? Will there be a recession? We had a Black Friday and a Monday, and then last night was okay in the stock market again a little bit. You have these things. But when people do their budgets for 25, they got to look at this and go, hang on, how did I do versus last year? How am I doing versus budget? And this is where I see the relationship again between the owners and the operators and all the brands. Who has the better connections? Who have been more open about, and who's been more diligent in their forecasting? Because I've run this a couple of times as well. Flags are starting to change a little bit more, right? Because that owner is going to look at that other brand and go, you know, you said that this year we were going to do this, and that didn't happen. I'm sick and tired of your forecasting that doesn't hit. So they start looking at that. Because we get these precarious months where labor costs per available room is growing so quickly that it hurts your bottom line. And that's where the owner goes, hang on, not happy about that. Bali doesn't have that problem right now, because as you can see, in the GOP per available room, it's stands out among those markets. Singapore, a little bit more tight. They're losing some of the revenue, and that impacts what they're doing. So I think that's a big story. So when I summarize this, performance is good. I think everyone can say that generally, right? GOP margins, 40%, 45%. A lot of it is back or above what we had historically, and RevPAR levels and top line is okay. So that's all right. People love this asset class. Talked about it yesterday. The diversification away, and you have markets, not just Melbourne, but when the vacancy rates there is about 20% in office space, and that's not alone in Melbourne, right? Tokyo have high office vacancy as well. Of course, when you multi-asset class owner, you want to go into data centers, which is a great investment. You want to go into hotels. So we have these new owners, definitely in the last 18 months, that want to get into hotels. But I keep coming back to the cost pressure. It is so important. I've never seen it more important than now that people manage that balance sheet accordingly as well. And the new supply, I didn't talk too much today in terms of time, but we have just passed the big delivery. But remember that it will come again. The pre-planning stages are growing for every month that goes up. And we'll see more hotels coming around the region that will, in 26, 27 onwards, start putting pressure on that again. So easy for me to say, be boring and say a bit of both. It's glass full and half empty. But it really is the case. It depends on where you operate. Because you might be happy with having this high new revenue, but the cost is definitely the biggest concern, and I look forward to that. Now, if you scan that QR code, I think it's big enough. You can access my profile there, and if I'm good enough, in the next couple of hours, I'll upload the PDF. When you go there, you just scroll down and find it. And if you don't, you contact me or contact the team here at Hotelivate.